what our focus area is.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D's trade. Also, we'll keep focus on the earnings that have been coming about and how the stock's performing. Also, what should be your investment strategy in the markets right now? We'll get you an expert view. But first up, a quick check on how the markets are doing at this point in time. Well, it has been a lackluster trade throughout this trading session so far, and the markets have been drifting lower as we inch closer to the end of the day. 18,278 right now for the Nifty. It's down about 70 odd points, so it's definitely slipped below that 18,300 mark. Even when we look at the Sensex, it's now down by about 229 odd points, about a 0.36% for kind of a cut. 61,730 or 760 kind of levels is what you can spot. The broader markets are also turning weaker, with the small caps now slipping into the red and the mid caps seeing a lot of sell-off coming in from the high point of the day. 0.1% uptick remaining on the index right now. The Nifty Bank has drifted to the lowest point of the day. You can see a 0.5% cut, and that's what's weighing on the market sentiment right now. Apart from this, we're also seeing some other pockets like the IT stocks also turn negative as we speak, about 0.2% of a fall for this one. Autos have drifted lower as well. It's flat with a negative bias for this one. Apart from this, we also see metals really cracking a lot today. A 1.5% cut for this one. The private banks, realty, even the PSU banks are down in trade. The saving grace being the pharma and the healthcare pack, that's still up and about 0.8% of an uptick can still be spotted on that one. The FMCG stocks also adding some strength to themselves. But apart from that, you're seeing larger sectors actually drifting lower in trade right now. In terms of the Nifty losers, you do have the Adani group of stocks coming under pressure today. Some profit booking taking place. 5.5% cut for the Adani Enterprises stock after about 35-40% kind of a move that we've recently seen on the stock. Adani Ports is down by 2%. Apart from this, some of the automakers like Tata Motors is down. HDFC Twins, the heavyweights, are down in trade as well. What's on the upside? Still remaining among the top 5 gainers on the Nifty. Pharma pack like Sun Pharma, Dr. Reddy is still up about 1.5 to 2% odd. Hero Motocorp, Titan, Tech Mahindra. These are the stocks that are still holding up in trade. Time now to welcome our guest on the show. Mr. Nipun Mehta really joins in. He's the well-known market expert. We've spotted him on this channel also a number of times. Welcome, Mr. Mehta, and thank you so much for taking the time out for this discussion. I wanted to take your view on the markets first of all. Of course, it's been a down day, but overall speaking, we did see that 18,400 mark really coming in. Most of the brokerage houses and the analysts are really think that the upside to this rally still remains. It's been a good comeback for the bulls. When we talk about the Nifty, it's up about 1,500 plus points from the recent lows where the markets were 6 weeks ago, and when everybody was really talking about a breakdown. And we are now in a situation when everybody is talking about a breakout happening. What do you think has really changed in the last 6 to 8 weeks or so, which has made bulls make a strong comeback? And the bigger question will be that whether this momentum on the upside will sustain.
Good afternoon, Sakshi, and thanks for having me on the show. So yes, really, we've seen close to about 9 to 10% rally from lower levels over the last 6 to 8 weeks or so. For various reasons, really, we've seen a fair amount of uncertainty as far as global growth is concerned. A lot of the developed economies still seeing fears of inflation, interest rates being high, still not necessarily any signs of turnaround as far as inflation or interest rates are concerned. So when you look at Europe, US, yes, clearly there are concerns. And when within that one sees an economy which is continuing to grow at a reasonably fast pace, you're clearly likely to have global investors wanting to start investing or actively or aggressively investing in India. That's what we've really seen in the last 6 to 8 weeks, where there has been a turnaround as far as FI flows are concerned. And one has seen uh, more of emerging market flow come in, and within that, a fair amount of flows coming into India. Clearly, on the back of good corporate results, at least initially, the initial set of large corporate results have been positive. At the fag end, typically at the end of the result season, one does see uncertain or lower than street expectation results of profitability. But overall, you can say that the result season also has been decent, and so that's clearly getting reflected in the market movement.
Right, you're right over there. We've seen the top dollars really pouring into the Indian equities over the last few months as well. But on the valuations aspect, do you think they have really become attractive at this time?
So after this kind of a run up, and with the kind of results that have come in on an average, one would think one would be fairly neutral as far as valuations are concerned. One can say they are fair at the current moment. However, within having said that, I think when one looks at certain sectoral results or certain individual
Yeah.
companies within specific sectors where there has been significant growth, uh, again strengthening of balance sheet, repayment of a lot of debt, lower interest cost, higher margins, and clearer visibility coming in over the next 4 to 8 quarters. I think one is likely to see upward movement coming in some of these sectors. So while overall valuations look fair, I wouldn't say they're rich. I think they're fair, but I would say within a lot of the mid cap and small cap space, valuations are or continue to be attractive.
Okay. Speaking about the levels as well, would you really say that looking at the current momentum, despite the macro concerns that you also pointed out, does the Nifty have in itself to touch the 20,000 mark in FY24?
So I would think there's a reasonable possibility of that happening uh, within the index. If purely looking at it from an index point of view, uh, clearly there is a higher weightage that's there as far as BFSI is concerned. There's higher weightage as far as oil and gas is concerned, and really both these segments have done reasonably well. Uh, IT probably is the third highest in terms of weightage, and uh, that sector has been beaten down in terms of valuations. Uh, that's something which could see an uptick. So when one sees the kind of results that have come in as far as the top three uh, larger weightage sectors are concerned within the index, one does get the feeling that there is that possibility that you could see the 20,000 index during this calendar year. If the point is, I think you could see, we are about 3% from the highest levels that we've seen on the Nifty. What we're talking about for 20,000 levels is about 9% levels higher than the
Yeah.
current levels. And uh, Not something which is not achievable, but one would think movement could, if not within the Nifty, at least within the mid cap and small cap, selectively in those indices, there could be a further up move as far as calendar year 23 is concerned.
Right. And now you did talk about some of the sectors that might look interesting. So, what to your mind is at the threshold of getting re-rated at this point in time? Whether it happens in a few quarters from now or not, but any particular scope for any particular businesses or a sector to get re-rated in that journey of Nifty to 20,000?
So one would think PSU banks probably could get re-rated. We've seen phenomenal results coming in from the entire PSU banking space, uh, with results for FY23 being probably, in terms of profitability, being one of the highest, having crossed almost $12 billion. Uh, but I think what's important is with a cleaner balance sheet, their ability to lend the liquidity that they have is something that could, and with reasonably high NIMs, I think their ability to grow is huge. The other sector, one would think, which would further get re-rated, seeing increased confidence, is the entire defense space. With the kind of order flows that are there. One has seen a fair amount of re-rating amongst a lot of the stocks, but if uh, a lot of the order flow is also backed by a lot of export orders, that's something that could further lead to further re-rating that could happen. I think the capex space, which has seen again a fair amount of traction over the last 1 or 2 quarters, given the kind of order flow that they have, the order book that they have, almost 2 to 3 years of order book. If one does continue to see the kind of execution that is there, and more importantly, order flow coming in, if it does come in from the private sector, we've seen a fair amount of large order flow coming in from the public sector, from government companies. But if it does happen from private sector, that's something that could further get re-rated. So, these sectors look to be sort of relatively low-hanging fruit in terms of the potential re-rating that they could have over the next couple of quarters.
Okay. Since you talked about the PSU banks first, I wanted to ask you about the poster boy SBI. Why is SBI suddenly underperforming? I mean, it's got everything going for it in terms of the bank, in terms of the macro tailwind, NPAs, but the stock, particularly in the last 5 6 months, has really not given as many returns as we were seeing before. What do you think has really changed, if at all it has?
So really, nothing has changed. I think whatever has changed is only for the positive. With a annual 50,000 crore profitability, clearly, I think it's been one of the best year as far as in the history of State Bank. Uh, uh, Given the positioning that it has currently, the kind of overall market share it has within the economy, and the possibility that you could see credit growth happening, given the kind of capex that's at least starting to show gradually from the private sector. If that's adequately also backed by credit growth that one could see clearly, SBI is likely to be one of the key beneficiaries of that kind of a credit growth. And you could see an up move gradually coming in. I think what's probably, again, not specifically talking about State Bank, but really as far as PSU banks are concerned, uh, to an extent, there is a fairly wide ownership that is there. And that's something which restricts it to in the stock prices going up. But our sense is the kind of valuation differential that's there between of price to book between a lot of these PSU banks and some of the private sector banks is something that could narrow over time. And that's something which should ensure that possible re-rating of PSU banks could happen in the next couple of quarters.
Okay. What about the new age tech stocks? Are they at all closer to getting re-rated and getting back on the earlier path of, the kind of gains that we've been seeing, especially with the results that have come about, like, Zomato, PB Fintech, Delivery, Nykaa is slated to come out today. Most of these stocks have been languishing and, have not performed, underperformed to a large extent for a long time. Are things really changing for the better for, if not all, some of them?
So one trend that one could see from some of these results was that their losses are reducing. I mean, a company like Nykaa obviously is in a profit, but at a sort of minuscule absolute levels that are there. But most others seem to be gradually reducing their losses over the next financial year. There's a possibility that they could probably be closer to break even in a quarter or so. They might even show a profit. So that gives a fair amount of optimism as far as some of these platform stocks are concerned. And if there is that visibility that happens, uh, of course, one has only seen a downtrend in terms of stock price after the individual IPOs are concerned. Some of them, one has really seen a huge downtrend, an erosion of stock price, and we've seen bonus issues and the works. But I think
Yeah.
what's important is a possible turnaround. If it happens as far as profitability is concerned, that's something which has then would ensure that there is that re-rating that's happened. Currently, we've seen almost all large or a large segment of institutional investors actually exiting after the IPO. But that's something that could probably, so to an extent, one could say that stock prices seem to have stabilized, uh, given the extent of huge selling that happened. After that, there is that degree of stability and that optimism that there could be a turnaround in terms of profitability, and that probably could change rating for some of them.
Okay, and on LIC, would you have a point of view? Especially today, the results are slated to come. Again, this stock has been a huge disappointment for all the investors who got their shares, in the IPO. They've been waiting for far too long for, profits to come about. The earnings have been largely decent, but things are not showing up in the stock price. Your own thoughts of what can one expect in Q4, and will things change after today's results?
So I think a part of the overhang has been ownership of a group of stocks which went down, where the stock prices moved down since January. And that's been one of the key headwinds as far as the stock price is probably concerned. But when one looks at the kind of business that's there across the insurance industry, I think that on the one side, we are seeing continuous growth, constant and consistent growth that's happening in terms of the overall premium collection that's there, number of policies issued that is there. And while the entire pie is growing, LIC continues to have a lion's share of the entire insurance business. So when one looks at the opportunity size that's there across the country, across the population, I think insurance as a segment, while growing slowly, but is definitely growing steadily, and it gives optimism for improved profitability going ahead. One already is seeing a reasonably good profitability, but even further, maybe improved profitability going ahead over the next few years.
Okay. One pocket that I've discussed with you even before, Adani Group of stocks, one comment on that as well. I mean, after the 3 days of run-up, again, we've seen some profits being taken off the table. How would you say that, the worries for the group are behind us with the kind of latest reports that have come about? Or will things continue to be dicey until and unless we do see some finality and conclusion in terms of what the court really decides as far as the allegations are concerned?
So I think one is the research report that came out, and the allegations that followed is one segment of it, and which is likely to continue to an extent, act as a headwind for the group, uh, probably in terms of raising funds or even otherwise. Uh, but I think when one looks at the performance across most companies in the group, one has seen continued increased profitability, good revenue growth that has happened out of those that are listed. Probably one or two could be an exception, but broadly, one has seen continued growth happening. Again, a fair amount of profitability. There are larger investors who are clearly showing interest in terms of investing. There are group companies which are showing or which have got which are taking board approvals for further raising of funds. So all of that is something that will gradually hold the group in good stead in terms of growth, in terms of further investing in assets. And business dependent, uh, I think if and as and when the headwind of the either of the court issues or the Hindenburg report is out of the way, you could see again a fair amount of capex and further investing happening within group companies. So uh, dependent on a lot of the maybe a sort of almost a semi-political issue that it's become. Depending on that, at least fundamentally speaking, uh, there seems to be fairly consistent growth that's happening within the group.
Okay. Well, on that note, thank you so much, Mr. Beda, for being with us and sharing with us all the insights about various stocks, sectors that we've discussed today. The markets are drifting lower. We're just about 12 minutes away from the closing of the day, and 61,800 is what we can spot on the Sensex right now. It's down about 180 odd points, 60 points lower for the Nifty as well. So it is tad bit volatile, 0.3% of a decline for both the major indices. We'll perhaps are going to be looking at a day of close in the red, but we'll keep an eye out on how the markets really perform, especially the broader markets, and if there is any sign of that really looking up in an otherwise lackluster trade as well. With that, we wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Thanks a lot for tuning in.